Shipleys FM, Episode 3, The Property Special.
You're listening to Shipleys FM from the accountancy firm Shipleys LLP. In each episode, you'll hear accounting and tax-saving insights to improve business and personal finances. Now, here's your host, tax specialist Dean Hardy.
Hello everyone, welcome to Episode 3 of Shipleys FM. This is a property special. We have a main topic on second properties and taxation around that. We have a contact interview with John Lanning of Buckley, which is interesting. We have a short mini topic on Airbnb and a staff profile with my colleague Alexander Beck. I hope you enjoy.
So it's been a nice hot couple of weeks. I'm sure you're heading down to the coast at the weekend to enjoy your second holiday home, as we all are. Tell us about second properties. So what are the tax implications if you buy a second home?
Okay, I suppose sort of more what are the tax implications if you sell a second home, really, and that's what we're talking about in terms of tax. If you, I suppose, sort of default position, if you're just buying a second home and you're letting it or it's a holiday home, you're going to pay some capital gains tax on it when you sell it. The difference between what you paid for it, any expenditure in the meantime, and what you're selling it for, there's going to be CGT exposure there. What we're really looking to sort of exploit, if you like, is where the second home is also a residence. So if you've got more than two residences, you have some potential to play around with the exemption around exempting from capital gains tax. Which one of those is your main residence? So as everybody knows, your main residence is exempt from CGT. Most people have one home, one residence, and when you move to your next place and you sell your old place, you don't pay any capital gains tax. If you've got a second home, you have the potential, second residence that you're using as residence, you have the potential to make an election to say, actually, home number 2 is a residence. Doesn't necessarily have to be your main residence, has to be a residence, and therefore you're exempting a period of that. On any home that has been your main residence, there are sort of deemed period of occupation. So, as everyone knows, when you move out of your house, the last 18 months are exempt from capital gains tax as if it were your main residence, and that's kind of always been there for those periods, for that lag time, maybe between buying your next place and being able to sell your last place. It used to be 36 months, is now 18 months. So it might be that you move out of your home, you move into your new home, and you can't sell your old place yet. And as long as you do that within 18 months, you're not going to be exposed to any CGT. If you go past that, you've got an apportionment, and the longer you move, the more of your potential gain, if it is a gain, is being exposed to capital gains tax. What you have the option to do within 2 years of your residence situation changing, which is a subjective definition essentially, it doesn't necessarily mean the acquisition of a new property. What it can mean is I had a tenant in there and they've left, so my residence position has changed. This property is now available to be a residence to me, whereas previously for a year, 2 years it wasn't. So 2 years from a point where your residence situation changes, you can make an election to say that one of those is your main residence or is a residence.
And this sounds a lot like something a member of parliament might do, flipping their main residence. But how do you actually go about making that election that one property is your main residence? Yeah,
it's an election that you submit to HMRC. Often you'll get a one-page letter back saying, we've got your letter and we've read it, but we're not making any comments on it, which is code for until we come to ask you about it later when you sell it and try and say that it's your main residence. So it really is as simple as that. It's a one-page election, goes to HMRC. Like we say, you've got to do it within the 2 years. That's the time frame. And essentially what you're doing is sort of looking to pick up that 18 months deemed period. So if you've got your home, and there are, this is quoted in HMRC's capital gains tax manual as an example of how this can work. You've got your main home and you've also got another home that you use as a residence. That's important, has to be used as a residence. And you could say, for 6 months, I'm going to elect for second home to be my main residence, to be treated as my main residence, and then you move it back after 6 months. You're exempting a 6-month period plus 18 months on the second home, so obviously therefore reducing your gain. If you own it for only 3 years, you're exempting more than half of it, and so on and so on. So it's worth thinking about bearing in mind that 2-year window. So it's not something necessarily you want to leave until I'm thinking about selling. It's something to think about from the outset.
So how does this work if you're required to work away, either in the UK or abroad? Does that have an implication too?
It can do. So a bit as we touched on with those last 18 months, there are deemed periods of occupation. So actually a 3-year period of absence for any reason can be deemed to be a period of occupation. If you're required by your employer to work away from home in the UK, period of up to 4 years, deemed period of occupation. Or actually, if you're required to work overseas by your employer, an unlimited period can be a deemed period of occupation. All of those require the property to have been your residence before and to resume being a residence afterwards. So sometimes, I met with a client recently who fell into a trap of, I've been away working, I'm in Dubai, I'm working, that home I've got, I don't need it anymore. That's in jeopardy of being challenged as a deemed period of occupation because you didn't return to it. So always worth bearing that in mind. Obviously, that's not an uncommon situation. My employer sends me abroad, I like it here, I'm going to stay for longer than I planned, I'm going to sell the property. Worth bearing in mind capital gains tax, because if you went back there for 6 months, you could exempt all of that, whereas if you don't, actually, you might be jeopardising some of that.
So you could have a home here in the UK and your employer could require you to work abroad for 10 years or even longer, but the home here in the UK could still be treated as your main residence for a capital gains tax perspective.
Absolutely, if you return to it afterwards.
If you come on, and do you have to be back for a certain length of time before you sell it?
Not really. I would say 6 months to avoid any kind of challenge, and that's kind of the general rule as you know, living at a property and trying to say it's your residence. Anyway, there has to be some degree of permanence to the residence argument. So a week or a month might be asking for some questions to be raised, but no, in the legislation there's no minimum period.
And over the 10 years, do you have to prove that you came back at certain points and you know how long you were there for?
Yeah, I mean that's always a difficult bit when HMRC come and ask questions about main residences. How do you prove this? And you really are reliant on you know your gas bills and your phone bills backing up what you're saying. So if you're telling HMRC you were living there for 6 months and there was no heating and no lighting and the phone was never used, it's probably not going to stack up very well. Things like the electoral roll, where is that registered? Are you a member of the tennis club around the corner? All of those things play a part, and it's not necessarily the stuff you keep with that in mind, but it's the stuff you'd go to look for if the question was asked. Interestingly, on sort of employments abroad, just worth touching on, if you're sent away on a temporary secondment, by temporary we mean less than 24 months. So if employer sends you away, that can be in the UK or abroad. They can pay for your travel and subsistence.
Your employer can?
Your employer can, with no tax implications. So we've got a big client who we see seconding people to the UK from overseas for less than 24 months. And if they could put them up, provide accommodation to those people or rent somewhere for them and reimburse that, and that's completely tax-free.
But otherwise, if it was a UK employer and a UK member of staff, if the employer started paying for rent and food and subsistence, everything else, there would be tax consequences.
There would be. The temporary workplace isn't necessarily over abroad to the UK or vice versa. You can be a temporary workplace if you're sent from Surrey to Yorkshire to work for a week and we put you up in a house. That would be okay. That's a temporary workplace, no tax consequences to the employer paying for that accommodation, a bit like if you went on a business trip and stayed in a hotel. The caveats being it has to be a temporary workplace. There are all sorts of cases around what is a temporary workplace and what is another permanent workplace, or whether this worker is just an itinerant worker who has no permanent workplace. So there are a lot of caveats to it. It's certainly worth looking at. But if you've got an employee who is being seconded either from overseas to the UK or maybe somewhere else in the UK, it's worth bearing in mind and getting in touch with your advisor that actually there might be some tax exemptions there that you can use.
I was going to ask about that because it sounds like a lot of this is quite subjective. I know there's obviously clearly defined periods where you have to be at home, you have to treat the property as your main residence, but I guess proving it becomes the really difficult bit.
Yeah, and bearing in mind you're always talking about after the event, so you genuinely are trying to collect up all your council tax bills and things like that in terms of proving your main residence. And again, there are on the employer provided accommodation, there are various arguments to be had, like we say, around. Sometimes you'll see an employer, there is a difference, say, between having an employee who is working in Dubai for your company and then he gets seconded to the UK for 12 months and you pay his accommodation. That's fine. no tax consequences. So you have a guy who's working for someone else in Dubai, and you employ him in the UK for 12 months. That's not a temporary workplace. That's a permanent workplace in the UK. So sometimes you've got things like that need to be carefully looked at. Or you might have a worker who has no permanent workplace. He's always on secondment somewhere. So those aren't temporary workplaces. It's just a number of permanent workplaces. So lots of things to be careful of, but worth bearing in mind if you find yourself.
What happens if people are looking at buying a second home largely to support a family member? It could be a student going to university. It could be, I don't know, bringing an elderly relative close by or anything like that.
Yeah.
Does this sort of fall into these situations?
Probably not for the sort of CGT exemptions, in that to access those it has to be your main residence. What we're seeing a lot of people talking about now is the stamp duty supplement charge. So as we've probably all heard, if you acquire a second property, you're going to pay an extra 3% stamp duty on the entire purchase price. So, and I've got friends and clients, who have been in the position where one of them owns a property and they become a couple, and you decide you want to go and buy another property between the two of you, but one of you owns that first property. You will pay the extra 3% on the entire purchase price of the new property, regardless of the fact that only it's 50-50 owned, which is a touch harsh, but that's how it works. If you are replacing a residence, so say you own somewhere, you move to second property, and then you dispose of the first one, you can have that extra stamp duty refunded. You get 3 years to do that. But if you're looking to hold on to it, you can afford into that supplement on the stamp duty.
That quite often happens when people become an accidental landlord, for example. So they may be inherit a property they hang on to. They don't own their own property yet, but when they go on to buy their first home, they get stung with the extra 3% stamp duty charge.
Or often where you see parents trying to help kids at university buy a property for them there, not even for their use necessarily, and get hit with that extra charge. Okay, and now we're on to the part of the podcast which is in theory the more interesting bit, in that you don't have to listen to me. I'm sat here in Queen Street in Godalming with John Lanning.
Good afternoon, Dean.
Hello, John. I'll start by saying, before I let John get into an introduction of what he does and who he is, John's far more used to having a microphone in front of his face than I am. Are you still a local radio celebrity, John?
It was only a couple of one-offs, to be honest, Dean. This was at Surrey Scorchers Basketball, where my company has been a long-term sponsor and helped out with the streaming of a few games there.
Do you want to tell us a bit more about that? Because you're quite heavily involved, aren't you, with
Yeah, we got involved probably about 10 years ago. I was a guest at a Surrey Chambers event. Mm-hmm. Let's go and watch some British basketball. And I thought, I love sport, but it won't be very good. So I went along to the Spectrum, as it was then. Mm-hmm. And the
What's
team,
it called now?
We're now at Surrey Sports Park.
Righto.
But at the Spectrum, and back then the team was Guildford Heat. Mm-hmm. It's now Surrey Scorchers, which is owned by the sports park, therefore the university. And went along this game 10 years ago and was totally knocked out by the athleticism of the guys, the family atmosphere and noise of the crowd. A lot of the other sponsors involved were local businesses who I was very keen to talk to. So I then had to go back to my board after a few conversations and say, I think this would be really good for us. 10 years later, and we're still on board.
Fantastic. And you've done a bit of the commentary on the of the matches, haven't you?
Well, the commentary was there, like I said, only really a couple of one-offs, a little bit of punditry, not so much great knowledge of the game, more that I know the players pretty well.
Fantastic.
Nice guys.
Anyone wants to have a look at John's LinkedIn profile, I think you'll find a fair bit about that side of things. All right, John, shall I let you do a proper intro to who you are?
Yeah, so John Lanning, I'm a director of Headley Group Ltd. Headley Group came around in 2016, 18th of November to be precise, which effectively was a coming together of three local companies. Headley Insurance Services, whose office is in Alton, Nugent Debenham, whose premises we are now sitting in, 6 Queen Street in Godalming, and Robinson Buckley, where I'm from, who also in Godalming. So all three companies were in excess of 40 years old, doing pretty much the same thing to a degree, all hopefully pretty well. Mm-hmm. Nugent Debenham and Headley Insurance Services came together about 5 years previous to that. Mm-hmm. And I'd known the principals of both firms for a long time previously. So yes, we joined in,
Why
which
not?
worked rather well. So now, yes, we're across 3 counties, so the Alton office, the Godalming office, and we have a Bournemouth office.
I've got to say, I'm grateful for the Godalming office right now. John and I are sitting in Godalming on a very warm day in what is a very nicely air-conditioned room.
This building, as I said, used to be Grant Denier's office of Nugent Debenham. What we did, we were in temporary office accommodation at the time. So Grant and Phil decided to keep this building, to push it back a little bit and push it up a floor.
Mm-hmm.
We have round about 20 people here at the moment. That is including, and not too many people are aware of this, but Yorkshire Building Society in Godalming is a franchise run by the Headley Group.
Is it really? I didn't know that.
So as and when people are coming into Yorkshire Building Society, that's we're above and alongside, all part of one happy family, one nice big happy family.
And in terms of sort of client base and the work you guys do, is it local clients, London-based clients?
We have clients all over, Plymouth to Scotland.
Mm-hmm.
Robinson Buckley side of things is heavily on the commercial side with some high net worth clients. Nugent Debenham has a similar mix. Headley Insurance Services, as well as a large commercial portfolio, also look after private clients. That's where our private client office is. The Bournemouth office is a specialist taxi insurance office.
Oh, really? Okay.
Which became part of the group prior to ourselves joining a few years previously.
Right. And you're quite prevalent in local networking. You're part of what I call the Godalming Mafia.
The Godalming Business Mafia, yes, that label came along a little while ago. Well, I've been coming along to the Shipley Business Breakfast probably around 15 years ago now.
Longer than me.
Indeed. I know the date because I wasn't living in the house I'm living in now at the time. That's more than 15 years ago. Yes. I think when I first joined Robinson Buckley, I thought, great, super company, great spread of clients, lots of different insurance disciplines. Why don't we do so much locally?
Yeah.
And as someone who grew up in the area, I knew a lot of the local companies, and then thought it'd be a good idea for someone to go out and talk to them, and that someone became me.
Yeah, John is a regular attender of our Godalming breakfast clubs, which take place on Friday morning once a month towards the end of the month. More information on those, if you'd like it, on the website, www.shipleys.com.
Yeah, the breakfast meetings I would thoroughly recommend. As I said, I've been going a long, long time. Every meeting I've come away with some great nugget, either of information or a person I've met who's could be helpful to me and or my clients. Sometimes it's a bit of IT information. Did you know you could do this way? No, I didn't, but now I do. It's great. They're a really good bunch of people. There is probably a centric body of serial attenders, such as myself, but there's always new people coming in and out, add a bit of freshness to it. Always very interesting. And as I said, there's not been an occasion where I haven't come away thinking that was very worthwhile.
Well, thanks, John. I'll just take the script back now, and I'll give you the money in a minute. No, yeah, we try and keep them. I think it's a nice mix, isn't it? Breakfast meetings and a mix of regulars like yourself and newcomers and what have you. So, thanks for those words. Just moving sort of more back to you than me. In terms of people listening, might be looking for insurance, for help with their insurance and what have you. I don't know if you want to touch a bit on where you can help on that side of things.
Where can we help? Well, as I touched on before, private client division works out of Alton, and they will give great help with anything on the personal side of insurance. Probably when I joined, we did a fair bit of property-related business here, which coincidentally and through no reason of me joining, quite honestly, we took off a little bit from that, and from one particularly large property-owning client came a number of others, and contractors and developers, and we have architects, surveyors, all sorts through the construction industry, and that's always been quite a large part of what we do here.
Bro.
On the slightly more unusual side of things, we arrange insurance for major dock operators around the country.
Okay.
marinas.
How did that end up being the case? Just the way it fell?
It's the way it fell. Yes, one of the great things is here when people join us, they'll suddenly pick up a bit of business and say, "Oh, what's this? Where did this come from?"
Yeah.
And I'm one of these very sad people that remembers the full story of exactly who introduced the business and where it came from. It's nice being able to do that, but I have been here 27 years, so I've got a little bit of knowledge before those grey cells completely go there.
And you do have one of those memories, don't you? You seem to be able to recall things.
It can be quite useful. Some people think it a little sad at times.
Bit of a curse.
Bit of a curse, yes.
Yeah, no, Docks and Marina, it seems like quite a niche area. Probably no bad thing to get your name around on.
No, absolutely. It's very interesting. We are one of the businesses where you never know what the next call is going to be. One of my dear clients, I think it was a Friday afternoon, 4:45. John, how are you? Yes, good. Good weekend coming up? Yes. Bit of a problem, John. Okay. We've bought a derelict warehouse up country. About 10 million rebuild. Hasn't been touched for many years. We need it insured now. Okay, so yeah, we managed to do it. That site actually became renovated, and another 3 blocks were put up round it. Lovely renovation job. But you never know what's coming.
No.
You know, unfortunate biggest loss I've dealt with had an utmost reserve at one point at £10 million, which was a fire.
Right.
And that was the rebuild cost of the unit, together with the stock and contents in there, and obviously interruption to the business as well.
Yeah.
So that's really what we're there for. You know, when the clients need us, most people need insurance. All companies need insurance.
Yeah.
Proof of the pudding really is when a claim comes along. So we take a fully active and supportive role in those claims to make sure we get quick and fair settlement.
Yeah, I suppose that's where the client relationship comes in, and as we were talking about earlier, sort of being there and being personable and being approachable.
Absolutely. I think it's a bit of a shame nowadays with the use of email, that it's just too easy to email. You know, I'd much rather hear from someone.
Yeah.
It can always be followed up by an email if things need to be clarified. That's not a problem.
Yeah, absolutely agreed. And how's the business doing? Obviously, as you say, you've moved into here. It's not that long ago, was it? How long ago?
Crikey, we've probably been in here about a year with all staff in. So the group came together in November 2016. We're approaching turnover, approaching the 15 million mark, which is no small amount or achievement.
Yeah.
I like to think what we've got right is size. We have the size to be able to do what our clients require of us, but we're also of a size small enough to be very approachable.
Yeah.
People can come and talk to us, and you know, not above looking to help people out.
Yeah. Big enough for the service, small enough to care. That's one of the
Absolutely.
That's the slogan, isn't it? Yeah. No, it seems like the firms. I mean, walking up and down the building, it seems like everyone's quite a happy bunch of staff.
Well, we like to hope so, to keep everybody happy. It's one of these things. Our latest member of staff, a young man, has come and joined us. He's a trainee, and he's getting on really well. It's great getting someone's feedback, you know, that are obviously enjoying what they're doing, learning something new, and he will be of great use to the company going forward. And we hope to continue with his employment going forward an awfully long way. We're always looking for the right people to come and join us.
You're looking for staff at the moment?
We are, yes. So if people who are listening have a background in the industry and think they would be of use, please drop in a CV to info@robinsonbuckley.co.uk. That would be super. Or to me, myself, John Lanning @robinsonbuckley.co.uk. All the email addresses are out on our website, which is www.robinsonbuckley.co.uk.
So I'm going away for a few months this summer, and I'm going to let my property out on Airbnb. What are the tax implications?
Similar to any kind of rental income, you're essentially looking at paying tax on the profit, with a couple of changes. It's actually quite a relevant topic at the minute because HMRC don't like it. But most people who are letting rooms out on Airbnb will use what's called the rent-a-room relief. So if you are letting a room, doesn't have to be one room, 2 rooms, in your main residence, you can use what's called the rent-a-room relief. If the income generated from that is less than £7,500 a year, it's entirely tax-free. Or you can use it as a deduction. So if the income generated is £10,000 and it falls under that rent-a-room scope, it's a room in your home, you can just use the 7.5 as a deduction from 10 and pay tax on 2.5. You can always, if you want to, access the kind of general way of doing it and work out your actual profits and pay tax on that if it works out better for you. And a lot of people are using that to cover the Airbnb. Now, a little while ago, HMRC introduced for trading income and for rental income a £1,000 de minimis limit. So aside from rent-a-room relief, if the income generated is less than £1,000, you have nothing to report, no tax to pay, even if it's £1,000 of profit. They introduced that at a similar time to bring out what's called a call for evidence on Airbnb rental income. So what they're saying is, tell us more about how rent-a-room relief is being used in this regard, how often it's happening, how much money is involved. And the feeling is they're going to take away the option to use rent-a-room relief in relation to Airbnb, and that £1,000 is going to replace it. So maybe some changes. The big rumour is they're going to change rent-a-room relief to bring in a minimum 31-day clause, which of course would take a lot of the Airbnb out of it. So worth keeping an eye on. Right, a quick addendum to the points just made on Airbnb. As is, I guess, the nature of the topic we're covering, things have changed since we recorded the episodes for Series 1. As of April 2019, in response to that call for evidence that I mentioned, HMRC have released some changes hitting from effect from 6th of April 2019, which effectively say for rent-a-room relief to now apply from that date forwards, there is a shared occupancy test. So the taxpayer must be living in the property for at least some of the time that the accommodation is let to qualify for rent-a-room. So letting out the property whilst absent will no longer qualify, and that changes from April 2019. So be aware of that. If you'd like any more information on that, do contact me. Thanks. It's time for the part of the podcast that is the Shipleys staff profile. Today I've got with me Mr. Alex Beck.
Good afternoon.
Or Alexander, as he likes to be known in the office. Alexander is the best dressed man at Shipleys. I don't know if you want to go into a bit about your history pre-Shipleys before we move on.
Yeah, quickly. I graduated from the University of Kent, did a degree in history with a 2-1, and then worked in fashion for a year, but somehow ended up here, but have loved every second of it so far. So. And
the fashion thing really shows. You get a lot of stick for that, don't you?
A lot of stick, but I'm confident with the way I look, so that's fine.
And why don't you tell everyone a bit about your role here at Shipleys?
So I'm a tax trainee at the moment. I'm currently studying for the ATT qualification. I'm a year and a half in, 18 months in. Actually closer to 2 years now. It's flown by, but
time flies.
Yeah, but yeah, just doing the studying and also just getting a feel for the sort of end-to-end process of the whole compliance of doing tax returns as well as looking after client portfolios. So, yeah.
And you've recently picked up your own portfolio of clients?
Yeah, about 85 odd, which is nice. A bit hectic at times, but it's enjoyable. Never really get the same thing twice, which is nice. Always a good bit of variety. So
yeah, as Alex says, he joined the firm a couple of years ago now as a tax trainee. Partway through that, and now is a fully fledged. What you call now, Alex?
I'm a trainee tax practitioner is what I'm called. Once I'm qualified, it will just be a full-on tax practitioner, but that's a few months down the line yet.
And he's still doing the graduate blog?
Still doing the graduate blog. Trying to keep the posts kind of once every 6 months or so, but they sometimes, with lots of things going on, it's difficult to get one out of that regularly. But there'll be one coming soon as regards the recent golf day we had.
When was the last one?
The last one was, I think, only 4 or 5 months ago. So yeah, not too bad.
We don't need to dwell too far into the golf day. I didn't win that, so fairly irrelevant, really.
No, I was a poor showing as well. So
anyone who does want to have a look at Alex's blog, you can find it at www.graduate.shipleys.com or via the Shipleys website. And I think we're done. Thanks, Alex.
No worries. Thanks, Dean.
Thank you to everyone for listening to this episode of the podcast. I hope you enjoyed it. My sincere thanks to John and Alex for coming on the podcast and giving us their thoughts. Worth bearing in mind, big changes to the taxation of properties from April 2020 forwards. So do check out our website, shipleys.com, for some insights on those. And as ever, any reviews, ideas, criticisms, praise, please do leave any comments you'd like, or as I say, any ideas for moving forwards on www.shipleys.com/listen, or indeed anywhere where you get your podcasts. Thank you very much.
Thank you for listening to Shipleys FM. Visit shipleys.com/listen to find out more and to subscribe to the show in your favourite podcast player. Tune in next time to hear more accounting and tax-saving insights from Shipleys LLP and our guests, all designed to improve your business and personal finances.